Hello, Seasonal Vantage Insiders, Alex here. So today's date, it is the 7th of April 2025, as usual, a Monday. I'm doing this at about 3 p.m. Okay, so I just came back from Malaysia. Okay, and if you watch my members only webinar last Thursday, you know that I haven't been feeling the best. I've been coughing. So not in the best condition. So pardon me if I keep coughing in this video. And in fact, I wanted to postpone the live stream tonight, the usual public live stream. But I see that, in fact, there's a market crashing right now. So I intend to go ahead with tonight public Facebook Live, okay, at 10:30 p.m. So as usual, tonight, 10:30 p.m., there will be the live stream. But I'm not sure whether I'll be, there will be some crossing of the same content in today's video and also live stream. I will see how it goes. But, today, right now, this video is about the market crash right now. Of course, if you have been following the market, I think by now you should know, okay. In fact, because after the Trump Liberation Day about the tariff, right? Okay, it caused a market crash. Okay, throughout the whole market. Okay, nothing is bad. Okay, except maybe the bonds. So everything is crashing down. So last Friday, the S&P was down about 6%. The Nasdaq 100 was down about also 6%. Okay, so market is crashing. So now the key question is, okay, is the market sell-off over right now, okay? But of course, today, okay, you can throw away all the seasonal trend and all this already, because right now we are not in a normal market condition. So the market is not in the usual ebb and flows, up and down of the usual market movement. But right now, because of external event, okay, of the for example, the Trump announcement and all this, right, the tariff and such, right, it caused market to crash. So I repeat, it is not in a normal condition right now. So right now we can throw away all the seasonality data right now. Okay, it's not following the seasonal data right now already. So we have to wait until the market condition goes back to normal. Then we can go back at the so-called the normal seasonal data and such. Okay, clear? So right now in this video, I'm just focusing on the market crashing right now and whether the sell-off is over or we are far from it. Okay, of course, the key question is, okay, has the sell-off going to be over soon, or is it just the start of the further sell-off and such? Okay, I think the key question is to ask, okay, whether the so-called the market has finally capitulated, meaning that the exhaustion, so the last stream of seller has already sold. Okay, whether we are there yet. Okay, but I think one thing I want to go through is that, okay, if you look through at a lot of these social media channel, you now see a lot of guru, right, saying that, see, I told you, okay, the market is actually signing off. I've been warning about the potential market crash and such, okay. I don't know, okay, but some of them has been calling for market top. A few have been calling for market top for quite a while, okay, while the market still continue to go higher, okay. All right, so if during that time when they started to call for a market crash and they started to short the market, they would have lost quite a bit of market while the market keep going to go higher, okay. Like what I say, okay, it is eventually you'll be right. So right now they are right already. That's why they say that, oh, I told you so, the market is going to crash and such now, okay. I asked myself this question, okay, would I have predicted this market crash or not? Okay, would I have the foresight, okay, have a crystal ball to determine that the market is going to crash, okay, just before it is going to crash? Okay, the answer, I asked myself a few times. I look at through the in hindsight all this. Okay, the answer is still no to me. Okay, I hope I'm going to be as honest to you as possible. Okay, the answer is no. Okay, looking through the market breadth, sentiment, and such and all this. Okay, I wouldn't have foresight. Okay, to tell that the market is going to crash so big time. Okay, this is a very honest answer to you. Okay, if you really want to ask me again, the closest thing I can tell you, okay, that the market is going to be weak, okay, is following the seasonal data that I've always been telling you that since early February and now, okay, the market is going to be weak. Okay, that is the crystal ball that I have. Okay, but I've never expected that the first week of April it is going to be so bearish. Of course, all the gurus will tell you that, okay, I've already foresee this and such. Okay, I think there's a lot of bullshit. Okay, a lot of times they are wrong. Okay, they never tell you. Okay, only when they are right, then they tell you that, hey, I told you, that kind of thing. So once again, my stand is that they are just, maybe they are right, but I don't think they are God. They know everything. Okay. So now, right now, I'm going to tell you, okay, so whether the market has finally capitulated or not. So there are a number of ways to determine right now. So the so the previous round of sold off, okay, I think that is still in the back of our mind. It is during the COVID sell-off, okay, COVID sell-off. Okay, that was the fastest crash in history, that it dropped from the peak to the trough. Okay, was about 35%. Okay, even the fastest sell off, right? Okay, also from the peak to the bottom, okay, also took about 23 trading days. Okay, that is about 1 month. So it started from about 20th of February to about 23rd of March. That is also about 1 month. Okay. So right now, okay, at this period of time, we are, in fact, the drawdown only started, crashing only started like less than 1 week ago, that kind of thing. Okay. So it is only about 8 days, 8 trading days only. Of course, if we talk about the peak it is actually from 19th of Feb. Okay, 19th of Feb. Okay, if you want about right now from here, it's about 1 month already. So will this be the capitulation? Okay, to be honest, I don't think this is going to be the end of it yet, but I think we are pretty close, okay, to a rebound already, pretty close to a rebound already. Okay, of course, tonight, this is the S&P futures. Tonight, okay, it is going to be also going to be gapped down, because the futures market, it is actually gapping down. Futures market is gapping down about right now. S&P futures is 5%. Nasdaq is about 5.5%. Okay, so there are a few ways to determine whether we are at the end of the sell-off capitulation. Okay, so I always go back to the decision point gallery over here. Let me go through the okay. Let's head back to this first. Okay, all right. So the percentage of stocks above the 200-day EMA. So we can use that. This is a long-term moving average. Okay, so if you expand on this, okay, I'm on a paid stock chart plan, so I can see more than the rest of you guys over there. So let's head back to maybe say 10 years. 10 years over there. Okay, so 10 years. You can see that when the market finally capitulated in, for example, the 2019 sell-off, 2020 crash, okay, and even 2022, the bear market in 2022, okay, you can see that there's a common theme, is that the percentage of stocks above the 200-day MA, it is less than 20%. It is less than 20%. Okay, all right, to the bottom, okay, you can see that the 2020, the COVID crash, okay, it is just I think about 3 or maybe about 3 or 4% above the 200-day moving average, which means that only about less than 5% it is above the 200-day MA, and typically it is at about 10%, less than 10%. Can you see over there? It is at about less than 10%, about that 10%. It is here, correct? This is 0, 10, then 20. Okay, then but this is very little, about 10%. Okay, and even that the 2022 bear market, the lowest was about 10% also. So the previous correction in 2023, the correction, right, it is also about more than 20%. So right now we are still above the 20% mark. So if you are asking me, is there a room for the market to have more sell-off? Okay, there is a possibility. Okay, there's a possibility. Okay, that, maybe it could go to less than 20%. So there's still some room to go. I think by today, because right now the futures, it is still crashing. By today, or which means that by tomorrow, this should be a new updated figure. Maybe we can go to below 20%. Okay, so we shall see how it goes. So, but right now, as of now, still not yet. There could be some still room to go over there. Okay, another one that we can be looking at, it is the percentage of stocks, not percentage, but percentage distance, okay, above or below the moving average. So take a look at S&P cash index. So this one you can just search for percentage. You can just search for percentage distance from moving average. Okay, so it is one of my favorite. Okay, so this is another indicator by some other provider. Okay, it doesn't matter. So it is the percentage distance from moving average. Basically, it's how far is it away from your stated moving average. Can be 50, can be 20, can be 200. Okay, so this is how far away is it from the moving average. I can just click on it. Okay. By default, okay, it is 50. Okay, so can change it to 200. That is what I'm looking at. Okay, the style, I just make it thicker so you can see it clearer. Okay. So right now you can see that it is about minus 12%, which means that it is minus 12% from the moving averages. So you can take a look at okay, if you key in the MA moving averages, moving average simple, okay, over there. So if you add in the $200, okay, 200 is like this. Okay, so in other words, it is telling you how far is it from the moving average. So from here, the moving average is here to here. Okay, to the closing price, it is about 11.9%. Okay, so it is about 12%. So this is exactly what it is telling you. So once again, you can see from here to the peak, it is about 8%. So from here, okay, from here to the top, it is about 8%. This is how far percentage away from the moving average. So if you zoom out and take a look, you can see where is the lower threshold of the market. Okay, so we can take a look, okay, at the indicator over there. Where is the lower threshold? Okay, where is that? Nearly at the bottom. So there is no fixed value because there's no fixed that how far it can go. It can go to 40% away from the moving averages, 50% away from the 200 days moving averages. So you can see that the 2020, it is typically is like the max already. Okay, it is like the peak of where it can go. Okay, so you can just draw a horizontal line. Of course, the latest we had in mind previously was the 2022 bear market. Okay, at the lowest end, it was somewhere around about minus 15%. Okay, about 16%. Okay, about here. Okay, there about, okay, plus minus. So previously, okay, you can see that the 2018, the correction also somewhere around there, 15% away from the 200 days moving averages. So if you go down further, okay, previously it was not there. Okay, after that it was in 2011. Okay, which is somewhere around the euro debt crisis. So go as far back as 2011 already. Okay, if you go back to the 2008 global financial crisis, is way below the threshold over there. Okay, it's at about 40% from the 200 days moving average. Okay, so we can see recently, in recent years, right? Okay, in recent years, okay, in recent year, this is about the threshold. Okay, about 24% from the 200-day moving average, the percentage. Okay, in terms of the bear market in 2022, that's about 18% thereabout. So if you're talking about that, okay, are we there yet? Okay, right now, not yet there. Okay, we are about just 12%. So of course, tonight, when the market continue to open, like the futures market, okay, the futures market, we are already there, okay, because right now, drop from the moving average. So if you use the futures market, okay, oops, not this one. Futures market, talking about the futures market, okay, there was the 2020 COVID sell-off, that this was the 2022 bear market, okay. we have reached already. So potentially, you know, the market might have any rebound really soon. Okay, the problem is, okay, you have to wait and see. Okay, tonight we see whether the market can rebound, but as of now, the market pre-market typically will be crashing one. Okay, pre-market will be crashing. If the rebound really comes, it will be during the normal market hours in the US market hours. So right now it is crossing the threshold, okay, in the 2022 bear market. Okay, and yeah, somewhere around there really. Okay, about 15% we are there. Okay, and if you are talking about the another DP indicator, okay, will be the McLaren oscillator. McLaren oscillator, it is where is it? Oh, cannot find. Okay, it is over here. Okay, this is the McLaren oscillator. You can see that we haven't reached the low here. Okay, haven't low here, where there might not be a climatic selling of. Again, when the market open tonight, this is based on a cash index. It can go even lower lah, but no, we haven't hit that threshold yet. We haven't hit that low threshold yet before a meaningful rebound could be happening. Okay, we are not there yet. Okay, and if you are looking at also at the net 52 weeks high, net 52 weeks high over there will be always got problem finding. Okay, this is the new 52 weeks high. If you actually open this again, I can go to further date. Let's go back to the past 10 years or so. Okay, you can see that it is not at the lowest right now. So if the market keep going lower, which means that, okay, there'll be more stocks that's hitting the 52 weeks low. Okay, it is quite intuitive, right? If it kept going down, there should be more stocks going below the 52 weeks low. Okay, you can see that the peakish where it is there, okay, it is at this low over there, this low over there. Okay, of course, 2020 was the exceptional one. Okay, there's a lot 52 weeks low, but we are not there yet. But I think by tonight it should be somewhere around there already. So we shall see how it goes. But based on last Friday close, it also hasn't hit there. It also hasn't hit there. But we are somewhere close already. Okay, okay, we are somewhere close. All right, so if you ask me whether we are close to a bottom, my answer is that potentially we might be somewhere close to a bottom, short-term bottom. Okay, whether the bottom it is a real bottom or a relief bottom, or we don't know. Okay, a relief bottom means that, okay, it is just going to go stop here and then go higher and then come back down again. Or is it going to be like the 2020 V-shaped recovery like that? We will know. Okay, all right. So right now we are at a stage where we are trying to guess whether it is going to be a reversal or a relief bounce. Okay, so in 2020, okay, all right, in 2020 I made a mistake. So in 2020, okay, I was actually very bearish. I thought that this COVID crash is going to be much worse than that because it only dropped 35%. So my previous anchor was at the 2008 financial crisis, because previously in 2008 great financial crisis, the market actually dropped about 50% from the top to the bottom, about 50%. Okay, and really after that there isn't really a market crash. Okay, 2011 you might call it a market crash during the Euro debt crisis, but in hindsight it is only a market correction. So in 2020 I was anchored that the market crash could be 50%. Okay, but of course it did not materialize. Okay, and at that point in time I thought that this is going to be much worse. It's going to rebound and then go lower at that. But in fact, it actually did a V-shaped recovery. Okay, it did a V-shaped recovery. Okay, so there are actually a few people I think calling for a V-shaped recovery. I think not a lot, but most people are expecting that the market is going to be more bearish. Okay, so this time round, okay, from what I see from the social media channel, I think quite a number of guru it is calling that this is going to be a relief bounce, which means that they think that this is the worst is yet to be, and they think that there could be more downside to go, which means that if the market it is ready to bounce up, okay, they could hit a resistance area and then going down further. So we need to anticipate what other people are anticipating. So this is what I call the second level thinking. It's not easy. It's not easy. Okay. So we can see that during the 2020 COVID sell-off, a lot of people are saying that it's going to get worse. Me, myself included. Okay. So the market did not actually follow this. In fact, did a V-shaped recovery. Okay. So right now, I think from what I see, still a lot more gurus are expecting a more sell-off. So yeah, so like that. So if a lot of people are thinking that it is going to be a relief bounce, then I think the reverse might be true. Okay, the market will not do a relief bounce and then sell off. Instead, it could also do a V-shaped recovery, unless a lot of people are thinking about a V-shaped recovery. Then there's a good chance that it might not happen. Okay, again, this sentiment it is going to be a bit subjective. Okay, because I can't really determine how many guru are expecting a V-shape or a relief bounce, that kind of thing. Okay, but as of now, I think that there are more guru expecting a relief bounce, basically short on rebound, that kind of thing. Okay, so we need to anticipate what other people are. So it's not easy. Okay, I'm just telling you that this is the second level thinking that it might happen. That if a lot of people are thinking the same way, then it will not happen. The key thing is this: if a lot of people are thinking of the same way, then it will not happen. So we need to monitor and see. So we are not able to determine when is the exact low. We will not be able to determine where is the exact low. So it is quite fertile to think like, hey, am I able to catch the bottom or not? Okay, the bottom will only be clear in hindsight. Okay, after the low is over, then you know that, hey, that was the actual low. But when the market is trading at the most right hand side here, it is very, very difficult to tell. Okay, so my suggestion is that don't need to predict the market low. Okay, again, how are you going to proceed, okay, with this kind of market situation? If you are into long-term investing, long-term, okay, again, long-term is very subjective. To some people, 1 hour is long-term, okay, because they are trading the minutes chart, okay. So my definition is that what long-term, okay, it definitely going to be more than 1 year. Like if you have the holding power to hold more than 1 year, okay, I think right now it is a good chance, okay, to buy into the index or some of the undervalued stocks that you wanted to buy, okay, when it's down like 20%, okay, when it is down 20%, okay, when the market it is down like 30 to 40%, okay, then you can buy another tranche some more, okay, when it is down 50%, okay, then you can buy some more. So you can what we call the dollar cost averaging now, okay, you buy in a few tranches. When it's down 20% right now, your first bullets, okay, you can buy some, okay. When it's down 30 to 40%, down 30%, you can buy some more. When it's down like 50%, the last tranche, you buy all in, that kind of thing, okay. So this is based on long-term investing, okay. If you can hold, okay, don't come and ask me that the market is dropping, what should I do, that kind of thing, okay. If you cannot tahan this kind of volatility, okay, then don't do anything, okay, then don't do anything, okay, then don't do anything. All right. But if you're talking about short-term investing, short-term like for example, swing trading and such, right? Okay. For swing trading, then you need to be a little bit more careful. Okay. There's increased volatility. So not many people can take it. Even if you set a stop loss level, you might also get stopped out very easily. So my view is that if you are into swing trade, you can step aside first, okay. Don't do any swing trade for the moment, okay. All right, you get stopped out very easily, okay. All right, so right now you can throw away the seasonal data. you can stop short-term trading for a while first, okay? Or lastly, okay, how do we want to be sure that the market is going to be like reversing up, okay? A higher probability that it is going to reverse up and you just follow the trend, okay? So to be really honest, okay, it is very simple. It is just that you cannot catch the absolute bottom. You won't be able to catch the absolute bottom, okay? The thing that you can do, okay, it is actually to just add in the central pivot range, okay? The central pivot range over there. Central pivot range, where is it? Okay, this is this, okay? No need the cloud, okay? Just remove the cloud. Just the central pivot range will do, okay? I just state it up front here, okay? Price has to be above, okay? CPR for 2 consecutive months. It has to be above the CPR for 2 consecutive months, okay? So let's go back. Let's go back to the 2022 bear market, okay? 2022 bear market, okay? It is over here, okay? 2022 bear market, it is over here, okay? This was the peak and started to go down, right? Okay, let's go through them step by step over there, okay? So when price is below the CPR, you ought to be a little bit careful already, okay? That it is still below the CPR, okay? All right, no go. This is the first month here in March, it is above the CPR 1 month, okay? But here, it is below the CPR, so no go, okay? And then, below CPR, no go, no go, okay? All right, so this is in July. This is the first month it is above the CPR over there, above CPR, correct or not? Okay. Second month, it is still below the CPR. The CPR is over there, so no go, so there's no go also. Okay. And then over here in October, okay. All right. Can you see that over here in October, closing, this is, yeah, this is still below the CPR, so no go, okay? In November, this is the first month it is above the CPR. So it is still not confirmed yet. It is still not confirmed yet, okay? It is still not confirmed yet, okay? And then second month, it is back to below the CPR again, okay? All right, and then first month here, it is above the CPR. Second month, it is still below, so no go yet, okay? So you need to wait actually, all right? First month, second month, that kind of thing, long term, okay? Then there's a 2 consecutive month, it is above the CPR, okay? Then you just right into the market, okay? So you can see that overall the market index is actually quite choppy here. It is quite choppy here. It's only until, you know, the May over there and it start going to go high. Of course, there's a pullback, drawdown above that, market continue to go higher, that kind of thing. So you might still get stopped out, okay? But, you know, at least it gives you a clearer signal. And previously, you can see that over here in the 2020 market crash over there, okay? So go down, go down, go down. First month above CPR, second month above CPR. Then it started to go higher. So yeah, then it just go higher. So you won't catch the absolute low, okay? So you might be thinking, hey Alex, the market has already rebounded so much already, okay? Sure, if you really wanted to have a so-called earlier signal, okay, then you can try to be more bullish when it is first month above the CPR. But you need to be prepared that, you know, it could be a false breakout and it can still go down, okay? You can get ready when it's above the money CPR, that kind of thing, okay? But there could be false signal like in the 2022 market crash, that kind of thing. So there are a few false signals over there, okay? Or in 2018, there's a steep market correction, okay? So once again, market was below the CPR. Okay, so this was the first month it was above the CPR. Second month it was above the CPR. Then okay, market continue to go higher. That kind of thing. Okay, continue to go higher. Okay, and then in let's go back to 2011 when there's a steeper correction when euro debt crisis. So once again, you know, this is the first month above CPR. Second month it is below, so no go. Okay, first month above CPR, second month above CPR. Okay, all right, then it is a go. But after that, gets some drawdown. But overall, you can see that this crash was the final go, but continue to go higher. Okay, and then in 2008 financial crisis over there, it was in a long drawdown, a multi-year drawdown. Okay, all right, once again. After that, in 2009, okay, in March, first year above CPR, second year above CPR. So it is 2 consecutive months above the central pivot range over here. Okay, so then can so-called higher probability that the market it is going to be a real reversal. So once again, the market would have already gone up, okay, but you wanted to be sure you follow the trend. So there will be some lead time, okay. So which means that, okay, if you really wanted to enter, okay, like for example, a longer term investing, also you want to do a long term investing, that you want to be a position trader, okay, which means that price need to be above the CPR for 2 consecutive months, which means that the earliest that you can go in will be in July, because right now it is already April, so most likely May below, June below also, or May above, June above. So let's say for example, May is going to go above the CPR, then June above the CPR finish. Then in July, then you are able to enter into the market. So it takes some time, okay? So for now, like I said, if you're into longer term investing, okay, then you can invest in tranches. Short term, you can just stop trading for now. Okay, you want to wait until the market really reverse. Okay, at least until the first month that it is above the central pivot range also. Okay, right now, okay, I'm just sharing my quick thoughts over there. Okay, a lot of things I just jump around. So sorry, I'm very sorry if my thought process is not very not very systematic and so on. But okay, if you have any question, okay, you can ask in the public Telegram group, or you can just ask in the comments section over there. So tonight I'll be doing the Facebook Live, public Facebook Live. There could be more updates, okay, but there will be some so-called cross-reference in today's weekly video update. So I'll go through some of the things again, okay, all right, for the public as well. So with that, thanks so much, and I'll see you again in tonight live stream. Thanks and bye-bye.